What's up traders, my name is Faro, and if you don't know, I specialize in trading synthetic indices, and in today's video I want to talk about the 8 new synthetic indexes that has dropped on the derivatives markets. So they have dropped 8 new pairs, 4 of them being Crash and Boom 600 and 900, but we also see 4 brand new, never seen before hybrid indexes called Volatility over Crash and Boom. So we're going to dive deep into these pairs, see how they move, see what makes them unique, and we're going to see how we can implement our trading strategies into these pairs to make even more money.
Okay, so now that we're on the chart, if you have not yet added them to your watch list, simply navigate to View, top left corner, and go to Symbols. Or you can alternatively just press Control U shortcut and your symbol section will open up. So when you navigate to Crash and Boom, make sure all of them are selected to pop up on your watch list, and then you'll see over here the new pairs have been added, hybrid indices. Make sure they are also selected to pop up on your watch list. Now before we get started, let's talk about how I perceive these pairs and how I approach them. Let's talk about one we are all familiar with, Boom 500. So you'll see on the top left corner over here, just above or just next to the trade panel, it says Boom 500 1 minute. On average, one spike occurs on the price series of every 500 ticks. What you'll notice is each of these indexes basically have a number attached to it, and this number basically indicates to you on average after the amount of ticks when you will have a big move occur. So basically there's already a gem for you right there. Now my understanding of this and how I approach it, you guys would know I only sell Boom, I only buy Crash. And the reason why I do that, you guys would see after each spike towards the upside, after each fast move, you are guaranteed to have that slow movement towards the downside. So what I do basically is I wait for all the spikes to occur, and I get in after the last spike, and I wait for that slow move towards the up or downside. So for instance, on Boom, I only sell, on Crash, I only buy. You'll see over here on Crash 500, for instance, how different this looks. Spikes to the downside and slow move towards the upside, and like I said on Boom, spike towards the upside and slow move towards the downside. Now let's quickly talk about the new Crash and Boom pairs that have been added, Crash 600 and 900 and Boom 600 and 900. You'll see that these are basically like our other pairs, where on Crash pairs we have spikes towards the downside and slow move towards the upside, and on the Boom pairs you have quick movements towards the upside and slow movements towards the downside. So this is Crash 600, this is Boom 900, this is Boom 600, this is Crash 900. Also, one thing to take note of, these pairs have only been added just over a week ago. So you'll see on the data side of things on the 4 hour, you can't scroll left to right. This is the only data we have at the current moment. Now let's get to talk about the new hybrid indexes, which is very, very interesting to me. So basically, same thing, you'll see that it's volatility over Crash. A volatility of 20% with an average of 1 drop every 400 ticks. Same thing, you will see that there's not a lot of data as yet. But if you come to the 1 minute, what do you pick up about this quote-unquote Crash pair? The exact same thing like with the other Crash pairs. You have spikes towards the downside and slow move towards the upside, but the slow move towards the upside looks more or less like a volatility index, right? And you'll see basically on the Boom pairs, you have spikes towards the upside and slow movement towards the downside. So that is basically very, very simple. I want to share this with you guys.